All right, my siblings and I have inherited Farmland Real Estate, which we own an LLC. First off, when you inherited it, it stepped up in basis, so don't forget that. We rent this farmland to tenants per a crops share agreement, where we participate in some of the expenses and profits on a 60-40 ratio. And then the questions are, since it's a LLC passing through K1s, do you get the 20% write-off? And then does the fact that we share crop have any effect? So there's rental income coming in from this, and there's active. And the regulations actually address this. I don't know if you want to, have you played with this at all?
Well, from what I've seen is rental income is subject to this 20% deduction, just as every other business type of income is.
Yep.
One thing I want to clarify, though, is your first question, since this is an LLC, you don't have to be in an LLC.
You could be a sole proprietor. You could just be getting it on your Schedule E, even through a disregarded entity or through nothing.
So while they call this a pass-through deduction, it needs to be named something else.
What they should say is something other than right onto your 1040. It has to go through one of the schedules. So it's Schedule E, Schedule C.
So yeah, this is primarily a business deduction. But rentals usually aren't considered business income, which makes it a little strange.
So all we have is proposed regs, and what they said is you aggregate it. For sharecroppers, you net it out. So you take a look, and it's the net profit off of both, and yes, you get your 20%. See?
That was a long answer to get there.
Yeah, but I like it. So you get a huge benefit, and don't forget, when you inherited that puppy, you stepped up your basis. Don't forget that. That's a huge one, which means the new basis is the fair market value on the date of the probably a parent passing, but whatever it was.